I do want to go back to what you were saying about, market function, because that's what we've been on the lookout for. When does this become a disorderly sell-off? And, as you mentioned, I mean, there's still capital available, but at the same time, you're seeing corporate borrowers step back from the bond market. I believe we didn't see any new issues on Thursday or Friday. You have a lot of worries here that credit spreads could widen. And I mean, you are seeing IPOs and M&A deals get sidelined here. But what does disorderly look like to you, Bill? And what would it need to look like for the Fed to actually really take notice here?
Disorderly is not that market prices go down. Disorderly is when markets stop functioning, where basically bid-ask spreads widen out, liquidity dries up completely. The kind of situation where you have, a true market event is like what happened following the Lehman failure in 2008, or what happened during 2020 with the Treasury dash for cash. The markets just stop working. That's when the Federal Reserve will intervene. If the markets are, still making prices and buyers are getting matched with sellers, even if the prices go down significantly, that's not going to bring the Fed in.
Bill, you mentioned before you think that tariffs are here to stay and at relatively high levels. Others have said, I think Elon Musk, talking to some conservative group in Italy, recently said that he hopes the EU will bring tariffs down to zero, and then we will as well, and we'll have some kind of free trade zone. I'm not sure if he's still privy to the way Donald Trump thinks about things, but is that at all likely that everybody backs down to zero, that this is just a negotiation tool?
Well, the funny thing about that argument is that the European tariff levels are actually right now very low. The reason why Trump has hit himself so far is because we're running a trade deficit with Europe. It's not because the tariff levels are high. President Trump has also argued that the value-added taxes that the Europeans impose is somehow unfair to the U.S., even though the value-added taxes are imposed against all goods that are sold in Europe, not just U.S. imports. So I don't really understand what the Europeans can do to make President Trump happy with them.
I was very confused about the value-added tax story also over the weekend, because what are they supposed to do? Take away their domestic taxes? I mean, Bill, another question I have is not just about European taxes, but U.S. taxes. To the extent that there was a market that was hoping for relief when it came to taxes, you're looking at a Congress that's still quite divided on this issue, and frankly, a fiscal situation that looks pretty bleak, and you have already a rating agency coming out warning that this could become a bigger issue. To the extent you have equity analysts now looking at repo rates overnight, I mean, you're getting to a level where people are starting to worry about funding stresses forming in this market. To what extent are you concerned about it, particularly as budget and tax discussions start to take the front seat going into the coming months?
Well, ironically, of course, the fiscal situation in the short run is improved, at least on paper, because the tariffs have gone up dramatically, and that's going to raise quite a bit of revenue. And then the question is, how does the Congress respond? Do they spend the money? Do they recycle it back to households and businesses, or do they actually book some of that to bring down the budget deficits? Part of the problem here is that this is not synchronized. The higher costs from the tariffs are going to occur before Congress cuts taxes. And so the near-term impact is going to be negative for economic growth.